So in this video, I'm going to expose Rolls-Royce stock by identifying if it's a safe investment or a value trap and reveal my price target. But first, is Rolls-Royce stock overvalued? In short, it's complicated because in 2022, the last full year, Rolls-Royce lost £1.3 billion. Unfortunately, in the last decade, earnings are so up or down that its historical averages are unreliable at best. That said, in the last 12 months, Rolls-Royce has made £1.5 billion, giving it a price-to-earnings ratio of 16.9 times. This is considerably higher than the UK market average of 10.8 times, which might suggest that Rolls-Royce is expensive or that the UK market average is cheap. So which one is it? Well, the trailing 12 months price to sales ratio of 1.7 times is greater than both its historical 5 and 10 year averages, suggesting that this stock is currently expensive unless it can see further financial growth. Before I reveal if Rolls-Royce is a value trap, I'm going to see if it's a safe investment, and it would appear that there's some major red flags that might make this a risky stock. Rolls-Royce, more like low-Royce. The return on capital employed of this stock is not great. Even at its peak in 2013, it was only 11%. Okay, fine, Royce is low, but what about the return on equity? Well, in 2022, it was 24%, which is very respectable. However, it's propped up by a falling equity value, which has shed £12 billion in the last 10 years. But maybe that doesn't sound like much to you. Imagine buying a business that has seen profits fall for 9 out of the last 10 years, and it's now losing some serious money. You'd probably be at least a little bit concerned about the future of the company. So, is Rolls-Royce stock safe? Well, earnings have been very volatile in the last decade. I prefer consistent businesses that have a more predictable future, and given the red flags that I've raised, I don't think Rolls-Royce is a safe investment. That said, Rolls-Royce isn't a safe stock, but is it a value trap? Rolls-Royce has 16.3% profit margins, has seen revenue grow 35% year on year, and a debt reduction of 36% in the same time. Year to date, this stock does look promising. In fact, the concerns I had previously about falling equity are reversing, with it increasing by 1.7 billion year over year. This has driven a net book value improvement of £4 billion, which, if sustained, is a great whopping reason for shareholders to be sticking around. But my concern is if another financial crisis hits. Could Rolls-Royce really survive? And right now you're probably saying, well, that's unlikely, we've just had a pandemic, what do you mean another crisis? And truthfully, with an order backlog of £60.2 billion in 2022, I think it's rather unlikely that another crisis may happen. But if it did occur, I'd want to be well positioned and defended against it. And the decline of the debt ratios has meant that Rolls-Royce is not as well positioned as it was 10 years ago. In fact, the quick ratio is lower than it was in the middle of the pandemic, meaning it's less able to pay off its current liabilities using its liquid assets, which is fine provided they can sustain profitability. Okay, so what do I think of Rolls-Royce? Is it a value trap? Well, in the pandemic, it was forced to dilute shareholders by 77% as business dried up due to a weak balance sheet. Since the balance sheet is still weak, even though the future looks more promising than it did, I think Rolls-Royce could be a value trap. Given I believe Rolls-Royce is a value trap, what do I think is a fair price for shares of this stock, and is it a buy now? I won't consider buying this stock until it has a consistent track record of profitability. Sure, I might miss out on the excitement and the explosive growth of the 200% year-to-date gain, but I'd rather invest defensively. Using a discounted cash flow valuation, I think shares are worth around £2.42 each, a discount of over 20% from the current share price. But maybe you're interested in a stock that's cheaper than Rolls-Royce. Do I know of any other good stocks? Well, yeah, click here to learn about 3 cheap stocks to buy right now.